Number 1. Start budgeting early. Create a detailed budget to track your income and expenses. Use apps like Mint or Good Budget to make budgeting easier. Budgeting helps you understand where your money goes, avoid overspending, and save more effectively. Review your budget regularly and adjust it as needed to stay on track. Include categories for savings, essentials, discretionary spending, and unexpected expenses. Regularly review and update your budget to ensure it reflects your financial goals and priorities. Number 2. Build an emergency fund. Aim to save 3 to 6 months' worth of living expenses in an emergency fund. This fund will be your safety net in case of unexpected expenses like car repairs, medical bills, or job loss. Keep your emergency fund in a high-yield savings account to earn interest while maintaining easy access to your money. Start small if necessary and gradually build up your fund over time. An emergency fund provides peace of mind and financial stability, allowing you to handle unforeseen events without going into debt. Number 3. Start investing early. The sooner you start investing, the more time your money has to grow. Consider opening a Roth IRA or a brokerage account. Invest in low-cost index funds or ETFs to diversify your portfolio and minimize risk. Compound interest is a powerful tool, so the earlier you start, the better. Even small, consistent investments can grow significantly over time. Understand your risk tolerance and investment goals, and consider working with a financial advisor to create a tailored investment strategy. Number 4. Live within your means. Avoid lifestyle inflation and keep your spending in check. Focus on living within your means and saving the rest. Avoid debt by using cash or debit for everyday purchases and only using credit cards for planned expenses that you can pay off in full each month. Prioritize your spending on essentials and meaningful experiences rather than material goods. Regularly assess your spending habits and look for areas where you can cut back or save more. Number 5. Build good credit. Establish and maintain good credit by using credit cards responsibly. Pay off your balance in full each month and avoid maxing out your cards. A good credit score will help you qualify for loans and lower interest rates in the future. Monitor your credit score regularly and correct any errors on your credit report. Consider using a secured credit card if you're just starting to build credit. Use credit monitoring services to track your credit score and receive alerts about any changes or potential issues. Number 6. Take advantage of employer benefits. If you have a job, make sure to take full advantage of your employer's benefits. This includes contributing to a retirement plan, especially if your employer offers matching contributions. Also, explore health savings accounts, commuter benefits, and other perks that can save you money. Understand the details of each benefit and how to maximize its value. Attend benefits meetings or workshops to learn more about what your employer offers and how to make the most of these benefits. Number 7. Avoid high-interest debt. Steer clear of high-interest debt such as credit card debt and payday loans. If you have existing debt, focus on paying it off as quickly as possible. Use the debt avalanche or debt snowball method to prioritize your payments and reduce interest costs. Avoid borrowing for non-essential purchases and consider consolidating high-interest debt into a lower-interest loan. Develop a debt repayment plan and stick to it, making extra payments whenever possible to reduce your debt faster. Number 8. Build a strong financial network. Surround yourself with financially responsible friends and mentors. Learn from their experiences and seek advice when needed. Join financial literacy groups or online communities to expand your knowledge and stay motivated. Attend workshops, webinars, and networking events to connect with like-minded individuals and professionals. Building a strong financial network provides support, accountability, and valuable insights that can help you make better financial decisions. Number 9. Continue your education. Invest in your education and skills to increase your earning potential. Whether through formal education, certifications, or skill-building courses, personal development is a powerful investment in your future income. Identify in-demand skills and pursue relevant training to stay competitive in the job market. Consider internships and volunteer opportunities to gain practical experience and expand your network. Lifelong learning and continuous improvement can open doors to new career opportunities and higher earning potential. Number 10. Set financial goals. Set short-term and long-term financial goals. Having clear goals gives you direction and motivation. Write down your goals and create a plan to achieve them. Review and adjust your goals regularly to reflect changes in your financial situation and priorities. Use specific, measurable, achievable, relevant, time-bound criteria to set and evaluate your goals. Track your progress and celebrate milestones to stay motivated and focused. Number 11. Understand taxes. Learn how taxes work and understand your tax obligations. Use online tax calculators to estimate your tax liability and ensure you're withholding the correct amount from your paycheck. Consider working with a tax professional if you have complex tax situations. Keep organized records of your income, expenses, and deductions to simplify tax filing and maximize your refunds. Understanding taxes can help you make informed financial decisions and avoid surprises during tax season. Number 12. Save for big purchases. Plan and save for big purchases like a car, vacation, or home down payment. Avoid financing these purchases with high-interest loans. Set aside money each month in a dedicated savings account to reach your goal without going into debt. Research the best deals and negotiate prices to get the most value for your money. Saving for big purchases ensures you can afford them without compromising your financial stability or taking on unnecessary debt. Number 13. Protect yourself with insurance. Make sure you have the right insurance coverage, including health, auto, and renter's insurance. Insurance protects you from financial setbacks due to accidents, illnesses, or other unexpected events. Shop around for the best rates and understand your policy terms. Consider bundling policies for discounts and reviewing your coverage regularly to ensure it meets your needs. Adequate insurance coverage provides peace of mind and financial security. Number 14. Learn to cook. Cooking at home is healthier and cheaper than eating out. Learn basic cooking skills and plan your meals to save money on food. Buy groceries in bulk and use leftovers creatively to minimize waste. Experiment with new recipes and meal prep to make cooking enjoyable and efficient. Cooking at home can also improve your nutrition and overall well-being. Number 15. Use student discounts. Take advantage of student discounts on everything from software to travel. Many businesses offer discounts to students with a valid student ID. Use these discounts to save money on essential purchases and experiences. Research and compile a list of available student discounts to maximize your savings. Student discounts can significantly reduce your expenses and help you stretch your budget further. Number 16. Avoid impulse purchases. Resist the urge to make impulse purchases. Implement a waiting period before buying non-essential items to ensure you really need them. This helps you make more thoughtful spending decisions and avoid buyer's remorse. Keep a list of items you want to buy and review it regularly to prioritize your spending. Avoiding impulse purchases can free up more money for savings and investments. Number 17. Start a side hustle. Consider starting a side hustle to earn extra income. Popular side hustles include freelancing, tutoring, pet sitting, and selling handmade crafts. Use the additional income to pay off debt, build your savings, or invest in your future. Platforms like Fiverr, Upwork, and TaskRabbit can help you find side gigs that fit your skills and schedule. Set specific financial goals for your side hustle to stay motivated and track your progress. Number 18. Build a diversified investment portfolio. Diversify your investments to reduce risk. Spread your investments across different asset classes such as stocks, bonds, and real estate. Consider using robo-advisors to automate your investment strategy and ensure proper diversification. Rebalance your portfolio periodically to maintain your desired asset allocation and adjust for market changes. Diversification helps protect your investments from market volatility and increases your potential for long-term growth. Number 19. Stay informed about personal finance. Continuously educate yourself about personal finance. Read books, listen to podcasts, and follow financial blogs to stay updated on the latest tips and trends. Knowledge is power, and staying informed will help you make better financial decisions. Attend seminars and webinars to expand your understanding of various financial topics. Staying informed empowers you to make smart financial choices and adapt to changing economic conditions. Number 20. Practice gratitude and mindfulness. Cultivate a mindset of gratitude and mindfulness regarding your financial decisions. Reflect on your progress and appreciate what you have. This practice can reduce the desire for unnecessary spending and help you stay focused on your financial goals. Regularly review your financial achievements and adjust your goals to ensure continued growth and success. Practicing gratitude and mindfulness can improve your overall well-being and help you maintain a positive outlook on your financial journey.